Indranil, I read your note yesterday, quite enjoyed reading it. Now, what that note is saying that these are the things government should consider. So one side is the need of the hour, the desire, and second side is the compulsion. And the compulsion is that you cannot miss the fisc, you cannot go dangerously out in terms of government spending, and if the economy and the slowdown gets more pronounced, then the GST collections will compromise. So I guess the government is stuck between rock and a hard surface.
Well, we do expect the finance minister to adhere to the 3.4% of GDP target that was set in the interim budget. But, we think that it's perfectly fine to have a slippage of 0.2, 0.3%, although, doesn't look like the government will do that. So that's number one. Number two, ask yourself why have lending rates gone up, real lending rates gone up when the fiscal deficit has been cut? The answer is that, liquidity was tightened far more. So crowding out, which is fiscal deficit by liquidity, was actually rising because, on the one hand, you had the fiscal deficit coming down, on the other hand, you had liquidity coming down even more. So now that, liquidity is normalizing, since December, I think that there is, if the finance minister were to so choose, headroom to go, at least 0.2, 0.3% of GDP higher on the fiscal deficit.
Indranil, now when the budget comes out, if the priority is growth and if there is a slippage on fiscal, then the entire economist fraternity, the entire rating agency, experts, they will be the first one who comes out and says, oh my God, the fiscal has been compromised, where is the discipline? So the challenge is that one side is management and compulsion and second side is need of the hour.
Well, the last time I checked, I am an economist and I am saying that, you could have a higher fiscal deficit to support growth. Fiscal policy ultimately has to be counter-cyclical. And I think that, yes, there are views, differing views. Some may feel that you need to cut down the fiscal deficit. Some may feel that you need to raise the fiscal deficit. But like I'm saying, ultimately the whole point of having a fiscal policy is that it should be counter-cyclical.
Fat numbers are...
So I'm not so sure that this doomsday scenario will pan out.
No. We all are sincerely hoping that this is the worst of the turn, and both in terms of news and in terms of the cusp of the economy, it should improve. Otherwise, that's a real problem which we have to deal on a daily basis. The sentiment is fragile, and I'm accepting it. I'm really hoping and keeping my fingers crossed that we are in for an uptick in the second half. So, Indranil, my next question is that now managing fiscal could be all accounting jugglery. It could be smoke and mirrors. But on the privatization front, whatever number has been committed, that number also has been achieved by, disinvestment of HPCL to ONGC or merging of some PFC to REC. So in a sense, government companies are merging with each other and the number is looking strong. Everyone has made a case that government needs to privatize. They need to privatize not through the capital market route, but they need to privatize various other assets. Do you think that this time around there would be a serious out-of-box thinking on privatization of government assets, not just listed companies or not just insurance companies or some other companies which you can take public and, take 500 crores here, 1,000 crores here. But do you think something really big will come this time?
We'll have to wait and see. But, this certainly is not there in the BJP agenda, the pre-election agenda, but we'll have to wait and see. So how this goes.
There is, the expectation that you as well have spoken about in the report to fund the additional capex that infrastructure bonds by SPV would be a requirement. Do you see that happening, and what exactly is the outlook?
Well, clearly our view is that if you could raise, let's say, up to 0.5% of GDP of money through these infra bonds and use them to fund capex, you can make, put in many safeguards. You can say that, maybe a ministerial committee will have to see the viability of that spending, that it should be done properly. Projects should be, there at hand for this money to go. You can only put in the money if raise the money if there is the actual spend available and so on. But clearly that will help to boost growth. And if you go through this SPV route, then the crowding out is going to be far, far less. In fact, hardly any crowding out. So that's number one. Number two is that when you look at where interest rates are, obviously the RBI and the Ministry of Finance have taken multiple measures to bring down interest rates. We are expecting lending rates to come down in the next few months by 50 basis points. But the point is that this will first benefit the larger industries and go down to the SMEs with a long lag. So if you were to offer a 2% subvention for 1 year, that fast tracks the monetary transmission process, and it costs barely 10,000 crore this year, 10,000 crore next year. But that's the benefits of that are far more than the amount that the Fisc needs to spend. So from that perspective, I think this budget will probably look at innovative ways to boost growth.
Indranil, I know it may seem like a Herculean task, but everyone's been talking about whether or not the government needs to give some sort of stimulus and try and revive the slowdown, especially in the consumption leg of the economy. Do you think it's possible at all, a stimulus at this point?
No, that's what I'm saying, that, stimuli of this point, the type where you give subvention to SMEs, costs barely 10,000 crore a year, which is 0.005 of GDP, raising money through, SPV for infra development. At some stage, I presume that, the Jalan panel will find excess RBI capital of anything between 1 to 3 lakh crore, using that to recapitalize PSU banks, increasing credit availability, pulling down lending rates. There are these options available, through which the government can fight the slowdown fairly quickly, in my view.
Okay, Indranil, just to sum it up, can you give us a list of 3 major factors that you would like to see, or 3 major changes that you would like to see come out of in this budget? What is the 3 tasks you think the finance minister should really focus on, or areas rather?
Well, I'll say it is, bringing down lending rates, because clearly, once lending rates come down, demand will improve, and the economy will, be on its way. Especially given the fact that, globally, we are looking at the interest rate cycle coming off. We are looking at the Fed cutting 75 basis points, the PBOC cutting 75 basis points. And I think that, the measures that the Finance Ministry and the RBI have taken over the last few months have already, paved the way for lending rates to come down.
Okay, Indranil, great to have you on the show. Thank you so much for taking the time out, and I'm sure we'll chat again in a week's time, or actually after a week, once the budget is out and done with, and we have lots more hopefully to analyze. But good to speak with you as always.